Hi, my name is Jun Siong. In this video, I'll be talking about what is CFD and what should we overlook before trading a stock. First of all, a contract of difference or CFD is an agreement between an investor and the contract provider to exchange the difference in value of a financial product. The investors never actually own the underlying asset, but rather they receive revenue based on the market changes of that underlying asset. If the asset value rises, he will receive a profit. If decreases, he take a loss. Essentially, the investors is predicting the performance of the underlying asset. CFD also contains counterparty risk, market risk, and liquidation risk. Previously, I have used a platform called Plus 500 to perform some tradings on CFD. Before trading any contract, we need to analyze the stock in terms of its financial performance, market performance, and so on. What method should we use? We can apply fundamental analysis, which means by looking to the recent news of the underlying asset to make decision whether to buy or to sell. Or we can use technical analysis, which means by looking on the chart of the previous historical price to predict the future price. The first contract I've bought is foreign exchange, USD against Japanese yen. According to Market Pulse, it is expected for the Japanese economy to be quiet for a while. The expected slowdown in the Japanese economy growth is being attributed to weak consumer spending and lesser demand for Japanese products over the world. On the other hand, US consumer spending is improving after a quiet first quarter of year 2018. According to CNBC Currency Market, USD is appreciating. It has hit a 4-month high against the Japanese yen as US Treasury yield rises. From the fundamental analysis, there is justifications that predict the price will continue rising in the near future. Therefore, we should buy now and sell later when the price increases. Next, I have performed a long position in the oil market. According to recent news, oil price hits $80 a barrel on 17 May for the first time ever since November 2014. The US sanction is the major reason that disrupt the Iran export of oil. Thus, it caused a fall in supply for the global market and therefore the price of oil will rise up to 20% in this year. The oil future price has also been increasing rapidly than expected. Furthermore, Pulitzer Prize-winning author and energy expert Daniel Yergin also predicts that the price of oil will rise to $85 per barrel by July this year. Therefore, it shows that the oil market is in a bullish situation. It is worth to buy now and sell later. On the other hand, I had also made a long position on Apple shares. During an interview, Warren Buffett said that Apple shares could earn almost twice as much as the second most profitable company in the US. He himself has just bought 75 million of Apple shares. Tom Ford, a senior research analyst from D.A. Davidson Company, believes that Apple shares will rally 30% over the following 12 months. He also predicts that Apple sales will grow up to 7.5% every year until year 2020. Therefore, it is very likely that Apple shares price is going to increase in the future. According to the analysts, it is worth to perform a long position. Next, this is the chart of the opening position of Index Germany 30. A technical approach is used to analyze the price movement of the stock index. The moving average and moving average convergence and divergence (MACD) indicator is used to forecast whether price would increase or decrease in the future. Notice above that the MACD line had surpassed the signal line on 30th April and cut through the zero line on 14 May. It is believed that the MACD line is at its peak, which means a bearish signal. This bearish position is somewhat risky as the MACD line might move further upwards. The strategy for this transaction is to sell when the upward momentum is at its peak and to buy back when the momentum falls. The transaction was closed on the 19th of May as the MACD line starts to curve downwards. Hence, the decision was to earn a fine cut and exit the market. That's all the experience I had from trading the 4 contracts. That's the end of the video. Thanks for watching. See you next time.